Yo, what's good, y'all? OD3 back here. I got a little trading video for y'all. So this is how my little trade I did today. I want to start off by saying I did two trades. I'm gonna go to the mini Nasdaq contract so I can kind of show y'all what I was working with. How? Oh shoot, let me take that off. All right, so yeah, let me go from the daily. Starting here at the daily, this is what we have. So I just want to mark out my levels. And basically just see what the market's been doing, right? So we've been having a nice little strong bullish uptrend. This market's been really bullish. So once you reach all-time highs and we lingering around all-time highs, we expect for new highs to just keep on being made and made and made until we are proven otherwise. So we keep on expecting to make new highs, keep on going up until we are proven otherwise. What do you mean by we are proven otherwise? I mean that as in until we are shown a new draw of liquidity lower, you feel me? That until we prove that the market is going down and has a new target of some type of draw of liquidity lower, we just keep on going up, right? That's what we assume. So with this in my mind, we had I'm gonna start off with yesterday's yeah, so this was last week on Friday. We tapped into this little BISI right here, this buy side imbalance, sell side inefficiency, right? We tapped into it right here. Boom. And just because we tap into it doesn't mean we can't revisit it. I just want y'all to keep that in mind. Just because we tap into it doesn't mean, just because we feel the BISI doesn't mean that price can't refer back to it. That's not true. Price can always refer back to it. All right, so cool. This was yesterday. Wait, no, this was Friday. Yeah, Friday. You see Friday's candle tapped into halfway of this discount wick. Cool. But okay, we focused on today. I'm not even gonna worry about that. So today though, what do we have here? We had this right. Okay, so price opened right here, fell all the way down here into this BISI again. We tapped this buy side imbalance, sell side inefficiency. Also, what do we have right here? We got a daily order block. Okay, cool. Scaling down, we're gonna go lower time frame. 4 hour, there's not that much in the 4 hour. But the 1 hour, what do we have right here? I'm gonna delete this real quick. The 1 hour, we got this right here. Another buy side imbalance, sell side inefficiency. Don't y'all see the little movement going on here? Hold on, let me mark this up for y'all. See, we got this little tap right here. We run up, go down, tap back down. We feel the BISI. See, we feel the BISI, and then we keep on rallying up, right? Let me delete all of that. So we feel the BISI. Respect consequent encroachment of the BISI, meaning we didn't go below halfway of the BISI. We keep on going up, keep on going up, keep on going up, right? It's all today. It's all right here today, right? All right, we're gonna scale down some more. Hop on a 15-minute. And what do we have right here? Just want y'all to pay attention right here. Actually, now I'm gonna turn on my little indicator. Give me a second. So this indicator is just basically showing us session times, whatever. So boom, right here we have Asian session. Actually, no, this is how I mark on my chart. So I first start off with the 12 a.m. time. I use the 12 a.m. as a premium discount array. That's the way I use mine. So I use it in the sense of like, if price is above, we're probably gonna sell. If price is below, we're probably gonna buy. Don't take that too straightforward. You feel me? There's other tendencies that you know counteract with this ideology. So don't just take that straightforward. But being simple with it, I see it as premium above 12 a.m. discount, below 12 a.m. opening time price. I mean, but yeah, 15-minute right here. What do we have here? At first, I wanted to see this fair value gap we traded out into. Cause how I do mine is I use what's it called, fair value gap, market structure shift, and retracement back into that. But we didn't get that, which is okay. I mean, we just followed the market. But yeah, this is my little fair value gap market structure shift. Why I call this a market structure shift? Because we tapped into this area of liquidity. We grabbed this liquidity on the 1 hour. This is the 1 hour liquidity, and then we make, we start going and make new highs. That's why I call this a market structure shift, right? Because we just grab liquidity from this area. So market is changing structure, going back up to the upside, right? Cool. And then once it doesn't become market structure shift until we close, this candle closes above this short-term high. You feel me? So cool. We down here, we consolidating, make the short-term high right here. We close above right there. That's when I know that as a market structure shift, right? Cool. We keep on going up, keep on going up, keep on going up. A little retracement. All right. So this is what area that really matters, right? 7 p.m. right there. Right. That's the start of New York morning session. That's like pre-market, whatever. All right. So cool. What do we have right here? We have another fair value gap, right? So we're gonna mark that, right? I want y'all to mark. I mean, I can't teach y'all nothing yet. I'm not by no means trying to give y'all no financial advice and nothing like that. I mean, I'm just showing y'all what I do, how I look at the markets. But yeah, so yeah, I'm gonna clear up these charts a little bit. I've got too much markings all over the place. But yeah, actually no, I'm gonna delete that. I'm gonna just delete this one. All right, so basically we got this fair value gap that was made, a 15-minute fair value gap. What do we have right here? 8 o'clock, 8:15. We trade back into it. I'm pretty sure we had news like around, I want to say it was 10. It was 10. Yeah, we had news like 10, but that comes in later. So, pre-market, we just consolidate a little bit. 9:15, we tap into it again. 9:30, we get this huge displacement up. I forgot to mark this certain levels. Give me a second. Okay, let's hop in the 5-minute. Yep, tear in the 5-minute. What do we have right here? Oh shoot, we have oh my god, I can't mark that right. My goodness, my fault. Right here we have equal highs. Right over here, equal highs. Right, equal highs right over here, paired with the sell side imbalance, buy side inefficiency, a SIBI. Right, so cool. We have these two together. Right, and we know our overall drawn liquidity is probably higher. Right, so we can't just go straight up. The market rarely ever goes straight up. We have to have some type of little dip. We have to go down before we go back up, right? All right, so cool. Keeping in mind, 8:30 right here. We drive up. What do? We clear these equal highs. These equal highs right here. Also, let me extend this out a little bit. The SIBI, it was respected somewhere. I can't. It's probably, yeah, right there. See on a higher time frame, like the hour time frame. We respect this SIBI on the hourly time frame. I forgot to mention. I'm sorry. The 1 hour, using time frame alignment, the 1 hour would pair with the 5 minute. So yeah, and that actually could have been a pretty nice trade going down. Kinda a little bit. I don't know, but yeah. Yeah. So we cleared the equal highs. Boom. After that, what do? We go straight down. We go down, down, down. What do? We go below the 12 a.m. opening price. And what did I say that is? That's a discount. That's a good place to buy, right? So I'm going on my 15-minute because this is my 15-minute fair value gap. Let me mark that out. My 15-minute fair value gap, right? And that's what we traded back down into, right? So anytime you see a PD array, right? Something like this, you don't want to just trade it. I mean, that's what I used to do. Sometimes it works, sometimes it doesn't. And then the reason it's a 50-50 when you just trade things like this, it's because you don't really know how far it's going to go, right? I took 2 trades. The first trade, I messed up. Let me show you my executions. Let me show y'all. show y'all my executions. Did they change these? Okay, execution marks. I took 2 trades. So the first one I did, it was the right trade, don't get me wrong, but my problem was, let me hide this real quick. My problem was is that I traded with the bad stop loss, and I believe my stop loss was right here, and that was it was a bad stop loss, something like that. So this is my first trade, right? So oh yeah, 15-minute fair value gap. So we trade down into this 15-minute fair value gap. What are we doing? We're clearing these equal lows. See, now we have these equal lows that were made, kinda. You can call them equal lows. Either way, we have this sell side. We have some sell side liquidity resting below here because this is sell side liquidity. You see all this stuff, sell side liquidity. This right here, sell side liquidity, sell side liquidity. So what do? We clear all this sell side liquidity right here. And then boom, we start making a move up. Let me tell y'all something. 945 to 10, those are high tendencies for reversals. 945, do y'all research, look it up. I mean, just look at your charts. 945, you can tell that a reversal is coming, right? All right, cool. So 950, that's when we start to, make this move up. It's a little bit slow. We start making this move up. Boom. We have start making this move up. Boom. We have our fair value gap, right? We mark this fair value gap out. This look way better on the actual. I don't know why it'd be looking like this. I just execute off of the mini, just for risk management purposes. But this is how it looks here on the 1 minute. It looks way better as compared to the. And it's always like that, but it's pretty much the same thing. But like, yeah, it's more respected on the actual Nasdaq. You see, and the candles are different a little bit, but I'm just explaining off of here. It looks better. So, you see, boom, we trade into this, right? So I entered like right here for my first trade, right? But on micros, entered like right here. I believe I have my stop loss like right below this fair value gap, something like right here. That's a bad stop loss, and seeing it after the hand happened, I realized why I made that mistake and why it was a bad stop loss. And I believe it was a bad stop loss solely because the reason we had news. You feel me? We had news. We had I forgot what news it was. We had some type of news today. Yeah, non-farm, all these type of PMI. We had this news. It was this news. Yeah. So with that given, that affected my whole course of that affects it just makes things more wicky. You feel me? It makes things more volatile. So prices crazy shoots happen. So you see, even though it was still respected, this fair value gap was still respected. It just shot farther than I'm pretty sure it should have. But even though I really should have had my stop loss at a better place, I mean, I really could have had it like down here. That would probably just mean that I would have had a size down though, and or like most likely really right here should have been like a really good spot for me to put my stop loss. But you just learn from that type of stuff. I mean, after the fact, I seen that I really could have toned the size down, or I mean, you really could just trade this thing right here. But I just really I don't know, it's too small. But I knew this was a guaranteed spot to enter, so I entered right there. I mean, it was respected, and then I seen that, okay, this was actually respected, so I said, okay, let me just enter back in. So cool, that's what I did. I entered back in, like around right here, something like that. Prices kept on going up. Let me show y'all my target. So mind you, we're like, hold on, where was we at by then? So we're probably like entered right here. So this is my entry area. I'm gonna say like right around here. And then my target, where was I targeting? I was targeting like these this right here. Was it this? No, I can't remember. Like right here. This I was targeting this little high right here. You feel me? Because I knew we were gonna. No, it was shorter than that. Yeah, I can't remember exactly. I'm sorry. Let me. I could turn on my executions. I have my executions on. Yeah, right here. So yeah, just like right above this high, I guess, whatever, something like that. But in total, it was a couple pips. But yeah, I mean, I made my money back that I lost initially. But I mean, that's pretty much the trade I took today. I'm sorry if I kind of broke it down a little bit weird. Basically, all I used today was oh, why did I exit off of there? I exited off of that because this 0.5 mark, which came from the premium wick of this right here. And that's why I entered off that 0.5. But you can see the market still running higher. I mean, yeah, it would have been nice to capture all of that, but you know, you just got to take what you're dealt with. I mean, you can't really complain at the end of the day. I mean, I could have got way more money off of that, but to be honest, it's not worth the risk. I just want to get my money and leave. You know, have time to do whatever I want to do for the rest of my day. But yeah, that's pretty much the trade I took today. I'm sorry if I ain't explained it that well. But yeah, I mean, that's it. Hope y'all have a good one. Y'all stay blessed. I'm going to catch y'all later. Peace.